All down, all silent, going, go, so congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Kieran O'Brien, and with me is Mr. Peter O'Malley. Peter.
Kieran, g'day to you.
Good to see you, my friend. Let's kick off today, and I want to talk about the Sydney property market, which we obviously do every week, but this week I really want to just get in and have a look at the nuts and bolts of what the market's actually doing. I don't know, about our listeners, I don't know about you, but the media I'm reading, the kind of commentary I'm seeing is that it's doom and gloom. There's market crashes coming. There's, drops all over the shop. Is that, first and foremost, is that your experience as an agent at the moment across Sydney? And do you think that the media portrayal is in any way sort of reflective of what is actually happening at the moment on the ground?
Yeah, thanks, Kieran, and great question. The media portrayal is somewhat reflective of what's happening on the ground, but it is being overstated. And I'm not a real estate agent that tries to talk things up in a downturn above and beyond the reality of the day. But what I've noticed, and what most people would have noticed since the budget, is certain sections of the media are drawing a straight line from the budget to the downturn in the property market as a way of weaponising against Labor.
Yeah.
And we've touched on this in previous editions of the podcast, but it is just so blatant and so obvious now that it's unmistakable. And people that I run into socially are asking, how's the market? Is it as bad as being portrayed as you've just opened here today? And the answer is no. It's not a good market. It's clearly off its highs. Yes, prices have fallen, but reading certain sections of the market, you would think we're in a 1929 style depression, which we're certainly not. I'll go as far as to say the market in 2018, when the Banking Royal Commission was taking place and there was a pseudo credit squeeze taking place, that was a much tougher market than what this one is.
Do you think that, before I kind of ask some questions about the market more broadly, what do you think the major differences are between 2018 and 2026 in terms of the knowledge, the preparation, the kind of leeway that buyers and sellers have had? Because I feel like, there's been so much negative rhetoric around the budget and the preparation for the changes that are coming that people in some way have had, an option to prepare a little bit.
Look, that's a really easy question to answer. Credit.
Yeah.
There's credit flow at the moment.
Yeah.
If you qualify and you've got reasonable financial position, you can easily get a loan.
Yeah.
What was happening in 2018 and why I still say after 30 years in real estate, it's the toughest market that I've personally experienced, is we were having financially independent, well-qualified buyers tell us on a Saturday, I'm interested in this place, don't sell it without me, I'll get back to you midweek, I'm going to buy it. And I didn't know what was going on at first. Most agents didn't know what was going on at first. And then the buyer would not return the call, or they would say, I've changed my mind or I'm not interested, and all the buyer demand was just falling over midweek when they were so obviously interested midweek. And then what came out over time, and some clients who I knew on a bit of a personal level were confiding in me saying, you wouldn't believe it, I went to the bank and they wouldn't give us finance.
Yeah.
And it was just at that time of the Banking Royal Commission, there was a witch hunt on, it was political. The banks put the edict out to brokers and their their managers, etc., lending managers, saying go back to an old school tie mentality of finance lending and see how the government of the day liked that. And lo and behold, the Royal Commission came and went. The only one that was accused of not doing the right thing out of a Banking Royal Commission were mortgage brokers. That was so. I read the Royal Commission at the time. That was so bad, that Royal Commission, in what it ended up, what its summary was and its results were. It was almost laughable.
Yeah.
And then the Royal Commission was over, and then suddenly credit flowed again and the market bounced back. So that's the big difference between a market like 2018, where even credible borrowers could not get finance, and what is happening at the moment where this is just a very straightforward, interest rates have gone up, borrowing capacities have gone down, therefore what buyers are prepared to pay has gone down, and property prices are slowly but surely following suit.
Excluding any other major elements, considering we have a lot of those already influencing the market, do you think there's any risk that this economy, in terms of the lending space, could progress towards a bit of a credit squeeze if house prices do actually fall, if there is just a sentiment within the banking sector that the economy is not as robust, that inflation might fly again, that there's economic uncertainty? Do you think there's any risk that lending, because I know it is reducing borrowing capacity at the moment, do you think there is any risk at the moment that it could just squeeze a little bit further and make it even harder on the market?
I don't think from a credit squeeze perspective, no. I think the market might tighten up further if there are further rate hikes, and the banks will continue to put tougher lending criteria on would-be borrowers. But a classic credit squeeze where the banks are not letting an appropriate amount of credit flow through the market to help it sustain itself, no, I don't think that is the risk at the moment. There's many risks at the moment, as we all know, but I don't see a credit squeeze being an immediate one.
One of the things you mentioned is that some of the commentary across the market, across Sydney, and yourself, is that there's certain sectors that you would think are in the Depression era. Can you, for our listeners, highlight what, and we can use broad language here, but what market sectors particularly are really struggling the most at the moment? And I guess I lead that question a little bit with, in other podcasts, in other times, we've talked about how the luxury end of the market's carried quite a lot of the done the heavy lifting for the market growth, etc. Where are we seeing the biggest struggles and deficits at the moment across Sydney?
Well, look, I'll go a little bit conspiracy theorist here.
Love that.
For a moment, if you don't mind.
Yeah, my wife will love that.
If we go back to Louis Christopher and his auction numbers, they are the true and best auction numbers in the marketplace, second to none.
Yeah.
In a normal market which is not politically charged like the current environment, the mainstream media all quote the auction results of their data houses.
Yeah.
Which, as we've discussed in the past, are essentially fudged, unreliable numbers, and 100% of the time far more optimistic than the reality of the day.
Yeah.
Louis' figures, even in a good market, underperform what the media companies' research houses' auction numbers are, because he's not as timely as they are by having a Saturday night result. He releases his results on a Tuesday of each week, but he captures all of the auction results in each state and each capital city.
Yeah.
The media have conveniently found an opportune time to quote Louis' auction numbers in favour of their own in-house numbers.
Yeah, suits their narrative.
Because Louis' numbers are more accurate, therefore they're lower, the media are looking for data that paints the bleakest picture of the market, and they're looking to spruik that. And there is no doubt that the auction clearance rate has hovered between 31% and 39% for the last 12 weeks.
Yeah.
If not 13 after today, which it probably will be. We're recording on a Saturday.
Which is crazy. Again, we were talking, let's go back 6 months, about how the auction clearance rate, or maybe even August last year, the auction clearance rate was below 50, how it was the start of a bit of a weird period. Every week you and I would question whether it would hover there, whether it would just climb back up and things would be normal again. And here we are, looking at a 3-month window of below 40%, which, is hard to think about, really.
Yeah. Now, I'm saying to people that auction is the wrong sale process for these times.
Yeah.
Even if you enthusiastically believe in the merits of the auction system, this is the wrong time for the auction system.
Yeah.
That much is clear when you're perennially stuck below 40% for 12, 13 weeks in a row. So the media have grabbed that data, particularly we're talking about the Sydney market now, of course. Other capital cities have performed a little bit differently, a little bit better than Sydney, and they're weaponising that figure as a communication tool to demonstrate how badly the Sydney market is performing. But it's really only feedback, Kieran, on how that sales process is performing on that day.
Yeah.
I will say that nearly the vast majority of properties that go to auction and fail do go on to sell in the weeks afterwards, simply highlighting trying to create a multi-buyer unconditional bidding scenario after 3 or 4 weeks on market is the wrong strategy and too aggressive for the current climate. If you're patient, you price accurately and you accept the price correction that's taken place in the market, you will sell.
I am interested, like really valid points, right? And you've always maintained that certain properties are for auction, some are not for auction, and in certain markets, auction's a terrible idea, and in others it does work, right? I'm interested because you do know the Sydney market so well. You know so many of the operators. You know so many of the agencies. Anecdotally, have you noticed that with the clearance rate being so dreadful, are you seeing agencies that notionally would just auction without even considering a private treaty sale? Have you seen them adjust their strategy for the benefit of their sellers as opposed to just pumping on with the auction process, knowing that it's effectively a waste of time, but a great way to make a bit of money?
Well, let me go to let's call it 35% on average that have sold for the last 13 weeks. If you drill down into the 35% of the auction sales that are successful, more than half of those have sold prior to auction.
Yeah.
So I have heard through back channels that direct competitors, not elsewhere in Sydney, but in the same postcode as us, they have a mantra, don't let it get to auction day.
Yeah.
Sell it before auction.
Which is unheard of for some of these agencies.
Well, that's their way of dealing with the downturn is, still run your auction campaign, but do your absolute darndest to get it sold before auction day, because if you do get to auction day, you're going to be left more than likely,
carrying a dog through another week or two.
Or having a one-buyer auction.
Yeah, which is not an auction.
No, it just ends up being a negotiation on the day anyway, of course. As I do look at other agents outside of the area and how they're operating, I would say I probably do notice a slight increase of just straight for sale coming out there. And I think some vendors who are watching the market and each Saturday night when they look at the auction results just see postponed, withdrawn. So, well, why are we going to sign up for that next week when we put ours on the market? Just put it out there, expressions of interest or by negotiation or private treaty, and we'll deal with it from there.
I really encourage, just on that point, I encourage our listeners to look up SQM Research and their auction results if you are interested in the market. We get no benefit from Louis for these promotions, but he truly does have great data. And he lists, every property, every suburb, every address that's gone to auction, and you can get that information there. It is really, really insightful. I wanted to kind of just turn a little bit and talk about the fact that, we are seeing these properties across Sydney that are going low, and you have said that the media obviously are pushing this, but just to come back a little bit, are there any particular segments of the market that you think are really struggling the most at the moment? I know we talked about the first-time buyer space is tough, but, as I mentioned, the luxury end often held the market afloat in some tougher periods. Are we seeing the same strength, or is it a bit kind of universal, or are we seeing particular segments that are taking the hit?
Well, look, let me talk about what's going well at the moment. We've just finished a day of inspections. Yep. Every inspection was well attended to, outstandingly attended.
It's good.
We have noticed lookers and tyre kickers and, just sort of people that are trying to fill in time attending open houses has fallen away. So at all of our inspections, we've noticed an increased quality per capita of the buyer, you might say. I put a one-bedroom unit on the market, ideal for first home buyers today. How many do you reckon would have turned up?
Which suburb?
Ashfield.
Ooh, I would think well attended. Probably, 20, 25 groups.
Yeah, 26 groups through. And I'd say 26 of them were serious about buying a property.
Yeah.
I think if we had 10 of these apartments today, we'd have sold all 10.
Yeah, wow. So there is strength in the lower, in the entry point, which, not to support the Labor policies, but that was their intention, I guess, was to strengthen the lower end. And there is some, not suggesting it is their policy, but there is strength in that part of the market.
Oh, that's exactly right. And I have no qualms in calling out that, that they have set the bottom end of the market on fire.
Yeah.
People are concerned that they're inducing kids into their first home with 5% deposit, and then if the market drops 6%, they're underwater.
And the rates go up.
The rates go up, and they're all fair points. So coming back to your question, that's what's doing well.
Yeah.
I'll tell you what else is doing well: large family homes close to the CBD.
Yep.
And renovated properties. And the reason renovated properties are doing well is that everyone is spooked by the cost of renovation, the difficulty in building, costs rising mid-project, etc.
Yeah.
So the adjunct of that is what's not doing well: rebuilds, properties with DA approvals because the existing owners have worked out it's too expensive to do the renovation. Anything that's sort of got potential, the market's a little bit hesitant around that. What's not doing well: strata properties that have got issues.
Yeah.
That's a constant resistance.
That'll be a forever problem in Sydney.
In the marketplace, there's no doubt about that. But hey, this is not a boom, but it is not a crash.
Is it a good time, talking about properties that are not suitable for rebuild because of cost, red tape, etc. Is it a time, if you've got a bit of money and a bit of time up your sleeve, do you think, to purchase something with a bit of land and a bit of future benefit in the hope that you can kind of weather this storm and see that rebuild, that upsize, that growth in 5 or 10 years?
I think so, Kieran. If I may give our current newsletter a plug, one of the articles in there is market mayhem.
Yeah.
Time to take advantage amongst the mayhem that is in the market at the moment. The best buys don't occur in booms.
Yeah.
The best buys occur in downturns.
Yeah.
At the moment, I didn't realise this had happened. For example, same but different topic, but realestate.com's shares have more than halved. Did you know that?
I didn't, but that brings me some joy, to be honest.
It brings you some joy, but I've got to take a closer look at it. But obviously realestate.com is not known or in the AI space, and everyone's going AI centric. But you've got a serious business there that the entire real estate industry feeds millions of dollars to every day, and its share price peaked at 278 and it's now running at 140.
Yeah, wow.
That's one to keep an eye on, I'll tell you now. So the best buying wasn't at 278. The best buying is now or coming up if it continues to slide, because realestate.com is not going anywhere, let me tell you.
Yeah. No, that's really interesting. I wonder, though, if they ever recover fully to the share price, given that most of the tech investment at the moment is in the AI space, as you say, or in rockets that don't make money. But that's a different topic. I just want to quickly stay on the market wrap topic, but ask somewhat tangentially about one of the legislative changes, which was the forced kind of advertising of price guides.
It hasn't passed the parliament yet.
Right. Okay. I still see a lot of agents doing it, though. I see a lot of publicised guides on properties that would not necessarily have had them previously. Do you think that is, and this is again purely anecdotal, but do you think that's having any impact on the number of properties, auction versus private treaty, etc.? Now there's a little bit more transparency around where people can filter out before they waste their time on a potential auction as a bunny.
Oh, look, it does feel, since we've had some high-profile prosecutions, it does feel like underquoting is not as prevalent as what it was.
Yeah.
So, if you miss a listing and the owner's thinking, say, around $2 million, and then it's advertised with one of your competitors for 1.55, you go, well, clearly that's underquoted. Surely someone's going to work that out. I'm not really seeing that at the moment. So I think the agents are acutely aware that the Department of Fair Trade are serious and the New South Wales government are serious, and prosecutions and bans, 10-year bans are in place. And I'd have to say that that's sort of moderated a little bit.
I must admit, from my recent experience, I've been assisting some friends to try and purchase a property. And when they've been sending me some to look at and give some advice on and thoughts, etc., one of the things that has actually struck me is that my evaluation, my kind of market analysis, etc., has put those guides pretty close, really, to what I think the property's worth.
Yeah,
which
I
is
think
unusual.
the underquote is back to 10%.
Maybe in some
below
cases,
fair
maybe
value,
even
but the
a little
whole
bit less.
20-25% below the reserve, if not more. Not seeing so much of that at the moment, I must say.
Yeah, look, 100%. I know in previous times I've had friends ask me and I've looked and said, you're dreaming if you think you're going to get that for 30% less than this. Whereas now, I agree. I think it's kind of 5, maybe 10%, which is certainly more comforting. Speaking of kind of working with my friends, one of the things that they've been feeding back, though, is, and I don't necessarily know which agencies, I can't speak on specifics, but certain agencies have been using a whole range of tactics to try and get them to purchase, which, we have discussed at length in previous episodes. But I'm interested in your thoughts on all the kinds of things that are being used, which is, the phantom buyers, the kind of the auction bunny approach, the pressures. They're still there in the market in the experience that we're seeing. But interestingly, they've got some agents that are just giving up the ghost on why families are selling, all the pressure points that they're facing. Now, I know that's a pretty unpleasant or risky thing to do as an agent. Do you think that that's a reflection of their fear or concern that the market's tough and they may not be able to shift these properties? Or are they just trying to kind of cajole people towards a sale for the sake of it?
Oh, Kieran, it's a lack of skill and ethics and training coming to the surface at the worst possible time on behalf of their vendor.
Yeah.
So if you can believe it, this week in the back and forth between the vendor's conveyancer and the purchaser's solicitor, I had the vendor's conveyancer tell the purchaser's solicitor that they couldn't accept a delayed settlement because their client was in bridging finance.
Yeah, wow.
In writing to the other side.
Yeah.
And with this whole confidentiality, why, every buyer walks in and says, why are they selling?
Yeah, of course. Yeah.
And you've got to have that answer ready as a real estate agent before it's asked. You can't be saying, well, because they've bought elsewhere.
Or the mum's got cancer and she's desperate. You can't give it up.
So the reason that people are selling, the buyers are trying to snuff out is, have they bought elsewhere or are they under pressure?
Yeah.
And that's another question that buyers will ask us all the time. Have they purchased elsewhere? If a real estate agent ever answers that in the affirmative, yes, they've bought elsewhere and they must sell, well, they're sending the price lower.
100%.
Oh, they're in bridging finance. Fancy your conveyancer negotiating with your purchaser's lawyer saying we need a shorter settlement because we're in bridging finance. And I can tell you now, the buyer dropped his offer straight away.
Of course he would. And I wonder whether then, again, tangentially, whether the sellers have any recourse there to claim losses because they are incurring a loss as a result of that breach of confidentiality.
Yeah, well...
I mean, that's complex, but...
Yeah, but it'd be very hard to get up on that one. It's certainly easier to hire a competent person in the beginning. So this is a great topic that you touch on. Is that the real estate agent must never compromise their client, nor must the legal representative compromise the joint client, the vendor, in the pursuit of a sale. And agents do that all the time because they've got a lack of training, a lack of skill, or a lack of ethics, or even a bit of both, all of that.
Yeah. On the flip side, though, if you are a buyer, it doesn't hurt to ask the question at the moment. If some agents are under pressure, you might just, they might let one through to the keeper.
Look, I like purchasing assets when the market conditions are ripe. This is a stock standard market correction.
Yeah.
So you don't need, as a buyer, to go out with a baseball bat and find someone who's under pressure and hit them harder. The market has done the hard work. It's knocked off somewhere between 5 and 10% off the price already. There might be a little bit further to go. If you think prices are still too high and they're going to fall further, don't go out and try and take advantage of someone. Just go back to the sidelines and let the market conditions of the day do the job for you.
Yeah.
And the market could start falling again in spring, by the way. I think this is another adjunct that we should talk about in our market wrap today, is the 26 parties are turning up to the first inspection. Why?
Because there's not enough stock.
There's not enough stock there because it's winter. So two things that for those that are not regular listeners of our podcast, two things happen in winter. Stock levels on the sales market contract because people don't want to sell in winter. They wait for spring, which creates artificial strength in the market of the day during winter. Conversely, in the rental market, people don't want to move, by and large, into a new property in winter, and stock expands quickly. So whilst we've had a 7.5-8% jump in rental prices year to date in Sydney for rents, at the moment there's too much rental stock on the market, and the market has settled down for the time being. And this is a perfect time for tenants to go and negotiate a new lease.
Yeah, so vacancy rates are up, unusually so, and as you're saying, artificially.
Yeah.
But it doesn't take long. Spring will be here in a heartbeat. And then we're facing a situation where, again, students are coming in for the next academic year, the families are beginning to move for new schools, etc., and there is no option. My final question for you then today, Peter, given we've talked a lot about, the conditions from both sides of the fence, what's influencing things. One of the questions my friends ask me that I'm helping is whether or not the sellers are likely to have time to entertain a conditional offer with, builders and finance and all the usual stuff. Now, we always talk about in a hot market, you go in with your 66W and you close the deal. And I advised, for the record, I advised them to do that on a property they're interested in because it is a good time to just go what they're after. But I wonder, in the market we're in at the moment, do buyers have a little bit of flexibility and power to take time and actually get through all those other checks that in an otherwise hotter market they would have done already?
Look, Kieran, let me explain it this way. One of the real estate, time-tested real estate principles is the best properties are the least negotiable.
Yeah.
So if you find yourself in the middle of the negotiation and you're able to push the vendor around as a purchaser to the degree that you're asking there, you're probably the only buyer on it.
Yeah.
So I tell you a trick that buyers are using at the moment, making an offer below what is acceptable to the vendor and saying, that's my offer, take it or leave it.
Mm.
And I've got one of these at the moment. I said, well, look, thanks very much, sir. I appreciate your offer, but I'm going to leave it.
Yeah.
What do you mean you're going to leave it? It's been on the market for how long? Well, it's been on the market for how long with someone else, not with me. I've had it for a week and I'm really comfortable with how this is going.
Yeah.
And I knew that buyer was going to turn up today's inspection, not to see the house, but to
see who else is there.
Yeah, exactly right, Kieran. Yeah. And he was shocked when he walked into a house full of prospective buyers, and they were buyers who were genuinely interested.
Yeah.
And I must say that I did change the price. I sharpened the price up as I took it over a week ago. And he's walked in, he's gone, you got quite a few people here, Peter. And it's like, yes, I do. These people are in your house.
Yeah. Well, which reinforces your point. If no one else is turning up, then all of a sudden he's got a bit more control over you, right?
Correct. And he's looking for leverage. So real estate agents and vendors need to play it smart at the moment because buyers are testing on this front all the time. There's no doubt. One of the things that we're doing with a lot of our properties is we're doing 3 or 4 open houses a week because what we're doing is we're working that buyer out of it that's interested but is trying to turn up to every inspection to see who else is interested.
Yeah.
So we're showing it so many times at odd times and different times they can't get to them all, so they don't know our hand.
Yeah. Yes. Yeah, good idea. Look, really great episode today, Peter. I think, every time we meet, we talk about how the market is fluctuant at the moment and more so than ever, we're in a bit of a, not unprecedented time, but certainly a difficult time in many ways. But as you say, and as we talked about, also great opportunity for buyers out there if they are ready. As always, though, I appreciate chatting with you, and I know our listeners certainly do as well, so thank you.
Thanks, Kieran.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.